Okay, it looks like we have a critical mass here. Again, thank you everybody for joining us today for Bootcamp Week 5, Understanding Alternative Payments Where Plastic Isn't King, provided for you by ROI Payments. Here is the agenda for today. We'll quickly review who we feel is interested in payments, as we have done in previous boot camps. We'll then go into an overview of what alternative payments are and why you might want to pay attention to them when growing your business globally. We'll then review what types of alternative payments are available, direct debits, e-wallets, real-time bank transfers, prepaid cards, and finally cash transfers. We'll then go into some implementation options, some technology considerations, as well as provide you an understanding of what to do next if you'd like to start exploring using alternative payments in your business. As far as an introduction, I am Brian Bonkowski. I'm the Managing Director of ROI Payments, and we put this bootcamp series together to help educate both our prospective customers as well as our existing customers on the interworkings of the technology space in terms of payment processing and to hopefully increase your what we call payments IQ. In terms of who's interested in payments, it's been very interesting doing this bootcamp series because we have seen a wide range of companies from large nonprofits to large e-commerce and market providers, software companies, software as a service companies, many of which are on this webinar today. And hopefully we will be able to, again, increase your payments IQ and let you know how it might behoove your business to explore alternative payments in various regions and depending on your industry. Okay, so how important is it to support alternative payments in international markets? E-commerce transaction values are growing, as I'm sure most of you know. Our studies show that they're growing at a rate of nearly 14% a year. And based on this study, a lot of the information provided in this bootcamp was provided by RBS, WorldPay, as well as a number of other partners. So according to our studies, a lot of that growth, as you can see in the graph here, is fueled by alternative payments and the growth of alternative payments. Basically, the important thing to realize here is markets can vary drastically. Even neighboring countries have very different behaviors when it comes to alternative payments. For instance, Germany and the Netherlands are huge using alternative payments, whereas France, the adoption is virtually null. Now let's review the alternative payments and trends in the AP markets. So what you see here is a quick guide as to how these various payment types will fare over the next couple of years. You can see some are growing and some seem to be losing traction. But as you can see, real-time bank transfers is likely to do nearly double the amount of processing it is this year in 2015, which is a significant boon in that particular payment method. We'll go into details later as to why we feel that boon is happening, but also to note that mobile market is still a relatively small part of the marketplace, and e-wallets are growing. As you can see, the actual direct debit network is staying on par or shrinking. But the most significant thing from our perspective is the rise in real-time bank transfers. Now let's take a look at each of these payment types and why we feel they're growing on an individual basis. Real-time bank transfers. These are particularly compelling for merchants since they offer guaranteed payment and usually next-day settlement. Real-time bank transfers are also growing in popularity at a consumer level, fueled by wider access and use of online banking and offering the combined benefits of bank-level security and card-level ease of payment. So this is why we expect real-time payments to make great gains the next few years. You see GyroPay and Ideal there. GyroPay is for Germany, and the ideal network is for the Netherlands. But again, we'll get into more region-specific issues going forward. The second note there is offline credit. Now, this is not popular in the United States really at all, and these boot camps are typically geared for U.S. merchants in the e-commerce space. But going into countries like Brazil and Germany, they are incredibly popular. Basically, how a offline credit works, you see a boleto there, the barcode-looking logo. Boleto is specific to Brazil. And how the payment type works is an individual who may not have a bank account, may not have a credit card, but they do have internet access in a cyber cafe, what have you. They go to purchase an item, they select Pay by Boleto, and they're printed out a barcode or receipt for them to then go and activate that boleto at a local market or a kiosk with cash. So they would then give that market owner or kiosk the cash to then activate that boleto. That market owner would then go into their system and activate the boleto, whereby the consumer would go back to the website, put in their boleto number, and pay for their good. Again, it's a bit of a strange way from our perspective in the U.S. to pay for things, but boletos in Brazil are accounting for up to 20% of online payments. So, something to be cognizant of. As far as direct debits go, they're limited mainly to low-value or subscription-based items. Direct debits are not relevant to all types of businesses. The added risk of chargebacks also make direct debits a less compelling alternative payment proposition than others. They may remain popular among both consumers and merchants for regular, predictable payments such as subscriptions mentioned above. As such, we expect a little change in the small but established AP type. Based on our clients at ROI Payments, a number of our clients are subscription billers, recurring billers, and in Europe specifically, this is a very popular way to get a subscription business from a recurring standpoint up and running at a lower cost basis than credit cards. So, though we see direct debit staying relatively constant in the market, looks like our clients do often take advantage of the payment scheme. Now let's move on to the other payment schemes. E-wallets, as I'm sure most of you are familiar with PayPal. The other logo there is Alipay, which is an e-wallet from China. These e-wallets are dominated as it is by some of the biggest names from the raft, as you see PayPal here and Alipay, as we mentioned. With the rise of generations raised using e-wallets as the natural choice for online purchase, we predict that this will have a sustained growth, especially in China, where Alipay is sanctioned by the government and promoted from within. As far as paper-based payments, you see traditional checks there, as well as cash on delivery. The paper-based alternative payment spectrum is a broad one. Just as e-wallets are expected to gain traction as younger shoppers emerge, we expect paper-based types of transactions to fall to online methods as online methods become more popular. We see a relatively significant market loss for traditional checks in the coming years. Mobile, as many of you I'm sure have heard the buzz around mobile globally and domestically here in the U.S. According to our research, there are approximately 472 million smartphones on the shelves, made their way into customers' hands off the shelves in 2012. The industry is approximately a $12 billion industry, but while this consumer surge may be fueling the purchase of digital content, mobile payments currently possess the smallest overall share of the alternative payments market, and we do not expect that to change anytime soon. Limited by comparatively higher fees, as much of the billing through these, as you see there, Boku and Zong, are done through the telecom networks, the price is actually significantly higher for merchants, as well as the risk that customers fail to pay for their purchase. Premium mobile payments are mainly used for items and appropriately low margin costs, such as gaming. Now that we've reviewed the specific types of payments, let's review what we feel are the drivers behind these trends. Technology. As mentioned in our previous boot camp on the names and nomenclature and how the various people and organizations and businesses fit into the payment scheme, technology is often the place where a lot of the innovation is driven. And from a push perspective, a number of new methods are popping up that are typically either venture-backed or private equity-backed that have a large marketing sense. And the recently announced partnership, for instance, between Xala and ZipZap, for instance, will provide quote-unquote tweens and teenagers with a way of purchasing virtual goods for online games without requiring access to a credit card. From a pull perspective, again, this is coming a lot from the digital game spectrum and the digital realm, where customers are expecting a faster and more agile payment mechanism. With almost half of the online shoppers looking abroad for goods, helping them pay how they want is going to be key to gaining their customer from a repetitive advantage, which is why we included that graph in the bottom here. The bottom line is shoppers are going more international, and the more international they go, the more they're going to be looking for alternative ways to pay for items outside of traditional credit cards. One thing we want to be sure to note as is incredibly imperative, we mentioned Alipay before being a payment mechanism in China, which is growing dramatically. As you can see here, the online economy in China is growing by 22%. That of India is growing by 40%. Real-time bank transfers are far outweigh credit cards in the use of paying for goods, both online as well as mobile. In India, so interesting things to take note as far as some of the larger growing economies in the world. Alternative payments are a significant part of that growth. Also note Brazil at 18%, again getting back to the boleto or the offline ticket mechanism whereby used by Brazilian citizens. Okay, as far as which verticals are alternative payments taking off, here we're taking a look at the world's biggest online verticals and where they stand in terms of AP penetration. Naturally, just as alternative payment spending varies by geography, so does the relative size of vertical sectors. In the U.S., for instance, the majority of e-commerce spending takes place with the retail, travel, airlines, and service sectors, with digital content, insurance, and financial and government services fighting for the scraps. And in the UK, a significant amount of online spending goes on insurance and financial services. Compare that picture to the rest of Europe, however, and the picture is vastly different. While retail remains a second-place spot almost universally, the remainder of European e-commerce spending goes on travel and airlines, global retail, services, and gaming. Oftentimes gambling as well goes hand in hand with gaming. Other than serving to illustrate that the online habits of various countries are fundamentally different, for our purposes, this comparison principally demonstrates that a combination of factors drive payment adoption. Not just regional consumer preference, but the spread of certain industries and verticals, the schemes they offer, and the anticipated growth of these verticals. In some cases, actually, AP alternative payments can simply be better suited to a specific industry. Another adoption is being fueled by industry expansion in a region in which AP is the norm. Now let's review alternative payment schemes by the major markets. So depending upon the percentage of alternative payments being used in a specific market, we then further broke that down to demonstrate which alternative payments are popular in those regions. As noted before, Germany is very big on direct debits. You'll notice in the Netherlands, if you choose to operate and sell goods in the Netherlands and you do not take Ideal as a payment method, you're missing out on a significant portion of the install base and the customer base there. In the U.S., as many of you know, PayPal is a very popular option. In China, UnionPay is huge and growing, again, because it is backed by the government, and it is widely used as a payment mechanism, not just to pay for goods, but to pay individuals as well. Lastly, want to touch on Russia and the use of e-wallets. I don't think you guys can see that very well on this slide. We will have this presentation up on our SlideShare site as well as recorded on our YouTube site for future reference. But as you can see here, Russia, due to the political turmoil and instability of the banking networks, a number of alternative payment methods have popped up, specifically around e-wallets. So a lot of those, the yellow there, are various e-wallets, and new e-wallets are establishing themselves throughout the Eastern Bloc. So being cognizant of that, of going after that marketplace, especially in the digital goods space, is imperative. Now let's look at some of the smaller markets. As you can see, the offline credit transfers actually have a significant impact in South Korea, in Greece, in Brazil, and partially in Belgium. But what I want you to take away from this slide is, depending on the country, you really need to help facilitate your revenue growth by doing a deep analysis on what payment methods are popular in the industry, in that geography, and perhaps trying to understand why those payment methods might be popular could help you increase your market share. Now let's go into the implementation of these schemes and how you as a business might be able to take advantage of these trends. Now, the difference between credit cards and alternative payment methods is relatively significant. First and foremost, they're oftentimes bank-driven payments provided by a closed-loop network or a three-party network. Again, referencing one of our previous boot camps between a three-party and a four-party network, Visa, MasterCard, Discover are considered four-party networks where the issuing bank and the acquiring bank are different because many of these payment schemes operate under the premise that they're both acquiring for the business as well as representing the person with the card. They actually are setting up their own closed-loop networks. In doing so, businesses need to be cognizant that there's often going to be a redirect, like in a PayPal site when you go to pay with PayPal. For some of these smaller merchants who may not be using the PayFlow Pro gateway, maybe they're using PayPal's own kind of facilitation of the gateway. They're redirected, and I'm sure you have been in some of your e-commerce purchases. You're redirected to PayPal, and then from PayPal you're redirected back. That's often the case with many of these bank-based payments as well as third-party networks to provide these banking and bank transfers. Because of this lag, there's oftentimes a lag in the settlement for merchants as well. So things to be cognizant when implementing alternative payments. As far as gateways that support alternative payments, here is a sample set of some of the gateways that we work with that support AP. Depending on the region you want to tackle, one of these or a combination of these gateways may be appropriate. Some of these companies, for example, Ogon in the upper left, Ogon bought was actually acquired by a company called Ingenico, which is why it says an Ingenico company now. Ingenico is one of the two largest retail terminal hardware manufacturers in the world, next to Verifone. And Ingenico had also bought a company called Tunz, T-U-N-Z. Tunz is a basically an e-wallet specific to Europe that enables bank-based payments in an aggregation sense. So a number of these companies have done the same thing. Optimal Payments also has basically a digital goods type of e-wallet to enable bank-based payments called NetTeller as well. PlaySpan is specific to the online gaming space and was recently acquired by Visa. But the options to load your quote-unquote PlaySpan account are vast, and as a business, those funds will eventually trickle down into your account. CyberSource also offers a number of alternative payment schemes. A number of those are actually powered by GlobalCollect. CyberSource and GlobalCollect have a pretty significant relationship with one another. Cardinal Commerce has a whole suite of alternative payments that you can either tack on to your existing gateway technology or use their technology as well. Cardinal Commerce, coincidentally, also owns the rights for 3D Secure on the Visa network, as well as verified by Visa and 3D Secure by MasterCard. 2000 Charge on the bottom left there. Though they have done a lot of work in the adult industry and more of the high-risk space, they do a lot of work in enabling digital goods companies, subscription companies, as well as those offering any sort of soft good from the U.S. to Europe with a very supported infrastructure for selling those goods. Typically in these types of arrangements, if you are going through an aggregation model such as 2000 Charge or NetTeller or Tunz, the payouts are going to be not as readily as credit cards. More than likely they're going to be weekly. Let's go into a little bit more specifics on implementation notes to consider when addressing the needs of alternative payments. As just mentioned, the aggregation options that we mentioned typically do not require you to set up an EU entity. If you wanted to actually acquire those transactions locally, you will be required to set up an EU entity. If you already have an EU entity, you can then take advantage of having that structure there as well as a local bank account. In terms of technologically speaking, that redirect mechanism, which is often required for these alternative payment methods to be utilized, as well as other HTML posts and post back and various different ways a gateway needs to communicate with the payment scheme is a consideration you need to take into mind when selecting a gateway. That and reconciliation. I believe a number of the people on this call do take credit cards as well as PayPal in the U.S. Similar to how you're reconciling those PayPal settlement and revenue against your GL and against your bank accounts. That's more than likely how you're going to be doing this when accepting alternative payment methods, specifically in Europe. Otherwise speaking, if you're using an aggregation option, oftentimes they're going to provide you with a high-level settlement with various payment schemes involved in the throw, and figuring out how to reconcile these against your back office is a consideration you need to take into mind. What does a sample plan look like? It depends on your option from an acquiring standpoint as well as your technology option, but the startup fees can be as little as $100, but can be significantly higher at $2,500. That's not taking into consideration starting an EU entity or another entity in a specific region. That can be done as well. Typical cost for that is between $2,000 and $3,000 to set up an entity to start processing globally. Monthly fees can range from as low as $25, and we put as high as $200, but oftentimes that can be even higher for products like a CyberSource or some more quote-unquote enterprise software packages. As far as transaction fees, again, they vary by scheme and implementation method, but typically you're going to see probably a 4 to 8% for an aggregation model, and either less than 1% for a locally acquired option. However, some of these may even be a flat transaction fee. GyroPay, for instance, is a flat transaction fee in Germany. So things to consider. We in our previous boot camp on multi-currency processing, we went over the back office considerations for handling other currencies. Similar types of considerations need to be taken into par when discussing alternative payments. Typical implementation time, again, it varies, but a good rule of thumb is 2 to 4 weeks. Oftentimes these projects will involve your marketing, finance, and your IT team. So what next? Either research on your own what payment methods are applicable to the areas you're going after. I would encourage you to find a partner, either ROI Payments or some alternative who has a deep understanding of the various regions and the implementation options, both from an acquiring standpoint and a technology standpoint. Lastly, test, and test again. We will often, as a part of our ROI analysis, present options to our clients as far as what additional currencies or payment methods we will suggest as a part of an implementation. We will then go back after the implementation is done to see if our predictions were correct and your revenue in those areas has increased. But again, testing these various types of options is a very important part of the process. Let me see if we have any questions here. If you have any questions, feel free to either raise your hand or type them in. Okay, well, it looks like we're just about in 30 minutes here. I appreciate your time, everybody. Thank you for joining us. And if you'd like to send this around to your colleagues, feel free to reference our YouTube site. It should be up in probably by end of day today. And we are taking a bit of a hiatus from our boot camps, picking them back up again in September. But you will certainly be sent an email as to when the next boot camp is, and if you have any other specific questions or projects you'd like to discuss, feel free to either call me directly, my contact information is on the screen, or send me an email. Take care, and again, thank you very much. Have a good day.